Good morning and welcome to the July 28th edition of the Gold, Goats, and Guns Market Report. My name's Tom Luongo. We got a lot to talk about today, but let's start with a couple of things, a couple of house cleaning tips. So I am still on vacation up here in the gorgeous wilds of northern New Mexico. I'm sorry I didn't get a report out on Wednesday. Frankly, it just slipped my mind. I needed a couple of days off from all of this stuff, and that's that. So mea culpa. And we've got some things I want to do this morning that I don't normally do. I'm doing this from my laptop, and it's a slightly different format, so I'm going to do what I can to give you what I normally do. I think I've got it worked out. We'll find out once I get done recording this as to whether or not it worked out the way I wanted it to. So with that said, let's get right to the commentary for today. So the first thing I want to talk about today is there's a bit of news that I haven't had a chance to write about, and I have a bit of a blog post started but not actually finished for the blog, and that's about the reopening of the border crossing between Syria and Iraq, directly against the wishes of the United States government. The big issue here is that the Shia crescent is beginning to form, and it's forming up in a way that no one in Washington or Tel Aviv are happy about, or Riyadh for that matter. The situation in Iraq, I haven't covered it a lot recently, but let's go over some of the high points. Last year, they elected a new government that was not effectively under the control of the United States. That government in Iraq is now trying to do its best to kind of play both sides against the middle. They can't sever ties with Iran, but at the same time, they don't want to alienate the United States either. Iraq is trying to maintain some amount of independence, and Elijah Magnier has covered this in grave detail. But the big one is the U.S. has been pounding Iraq to withdraw official support from the popular military units. Now, these are the Shia militias that were instrumental in actually ousting ISIS from northern Iraq, as well as pushing back the Kurdish revolt at Erbil in sometime last year. So the border crossing, I mean, if you look at a map of Syria, you'll realize that the United States is positioned and held on to its two main areas of control in Syria are the border crossing at Al-Tanf and surrounding area, as well as the Kurdish lands east of the Euphrates River, which is where all the oil fields are down in Deir ez-Zor province. So strategically, the United States has been trying desperately to hold on to its position there and keep the border crossing between Iraq and Syria closed, such that Iran can then not import oil into and weapons and everything else into Syria. Because as you should well know at this point, we are actively trying to hamper any of the reconstruction going on in Syria, because we still entertain some vain hope that we're going to be able to oust Bashar al-Assad from power. It's not going to happen. But this is going to continue for as long as guys like Bolton and Pompeo and Sheldon Adelson are in charge of foreign policy in the Trump administration. And this, again, ties directly right back into all the things we've been talking about. And it's one of the things that, to bring to my next point, that makes Tulsi Gabbard an interesting counterpoint to Trump within the Democratic primary process. Now, I'm not talking about Gabbard today in that same anti-war vein that I have talked about her in the past. And actually, I'm more interested in what she's done so far this week. I wrote the blog post on Friday, I think. God, it's Sunday already. About her suing Google for interfering with her election campaign, which is, I think, a brilliant bit of work on her part. And I talked about this on my live stream on Friday night. But also, what I didn't write about was that she also backed Thomas Massey's audit the Fed bill. So now we have bipartisan support in the House for an audit the Fed bill, which is going to go nowhere. But it's interesting to see that Gabbard is now aligning herself not just with ending regime change wars and all of that, but she's now beginning to seriously take up some of the most most important libertarian criticisms of the United States government, namely, what's the Federal Reserve doing? She's beginning to make those connections now. Remember, this is something to remember about Tulsi Gabbard. This is the last point I'm going to make. I'm not going to belabor this point because we have other things I want to talk about today. But what we have to remember about Tulsi Gabbard is she's only 38 years old. Okay, she joined the Army after 9/11 when she was 19 or 18 or 19 as a means by which to serve her country after that event. And it's very obvious that this is a woman driven by a high degree of conscientiousness, if you think about it in terms of the 5 pillars of personality. And she's a highly conscientious person. You can tell this. Okay. At the same time, she's a Democrat from Hawaii. And where I'm going with this is that she's just young enough and just passionate enough to be malleable and to follow her passions where she thinks they need to go. I see her as a person still in process of falling down the rabbit hole of what it means to be a patriotic American. I really do believe that. I've watched her enough to know that that's what I think is going on here. And I usually have a very good sense of people. Guys like Pompeo are transparently corrupt. Guys like Bolton are transparent in who they are. And someone like Gabbard it's very obvious that at her age, she's going through a serious revision as to what her worldview is. And it's especially true given the level of objection that's being thrown her way from the DNC and the GOP, the media, and everybody else. Her sin is she's criticizing the empire. And whenever you criticize the empire in the United States, you will be lambasted for it. There is no discussion on that. And so I urge everybody to remember that I'm not advocating you vote for Gabbard unless you want to vote for her in the primary, switch sides and vote for her in the primary, which I think my wife is going to do. She's not going to be president, but she's an incredibly important emerging figure over the next 10 years in American politics. And I mean that sincerely. And guys like Lou Rockwell and the late great Just Raimondo and others have been arguing since 9/11 that our goal within the anti-war movement is to reach out to people on all sides of the political spectrum in order to form some form of unified front. It's something that I did when I was doing libertarian politics back in the early 2000s as well. It's like, look, we have common ground. Focus on the common ground. Don't focus on the things we don't agree about. I don't worry about the fact that that Gabbard may be or staunchly anti-Second Amendment. I don't know. I think, I don't think that's the case, but, it doesn't really matter to me because it's so far down the priority list and it's so far away from reality that she would do anything about it as a Democratic president. It's insane. Her focus is very obvious. She's focused on these things that are important. And it drives me nuts to watch people let the perfect be the enemy of the good and to fall into their own grinding their own particular oxes as far as what they think is the real motivating or animating force in American politics, i.e. Israel and the Zionists and all that. It just bothers me because she voted against the anti-BDS bill the other day. I'm like, so what? It's so irrelevant. At the end of the day, it's completely irrelevant. It's not important. But of course, we have a couple of data points now which shows that she may be, a stalking horse for the bad guys, and there's 100 data points over here that says that she's not. But we're going to focus on the 2 that are. It's like I have no patience for that. I just don't. All right. The rest of this I'm going to get into in the charts. So we're talking about gold a little bit, and I'm going to talk about the Eurodollar markets because a patron asked specifically about it last night. And I got up early this morning. I was exhausted yesterday. We went to Santa Fe and had dinner, and I came home and I was asleep by 8:30, and I literally slept on. And of course, I slept a lot for me. I got up at 3, and so I'm recording this about 7:30 in the morning Mountain Time, and I spent about 3 or 4 hours trying to get up to speed on this because I thought this was an incredibly important part of the discussion that we should have, and I needed to spend a little bit more time getting boned up on on this subject, the subject of the Eurodollar and where we are, because I know that someone wouldn't be asking about this if something interesting hadn't happened in the market this week. So might as well take a look at it. So let's get started and we'll move on. All right. So gold, we finally had a pause in this 10-week uptrend. It's hard to consider this bar that I'm looking at right here as an up bar, but it is technically. So, and with that said, this week's action in gold was incredibly not volatile, and it's very interesting. So what I want you to understand, I'm going to take away here, I think that we're just getting a lot of sideways action here in gold, trying to consolidate these gains above 1400. I don't know that the market is looking for a move in the opposite direction yet. It may be that we put in a big high here last week. We'll find out. What's important to note is that we have 8 to 5 pot odds that we're going to go lower this week, and that will break the previous low, and that the potential for a 2-bar reversal this week is 44%, which would mean we have to close below this low, the low from the week of July 14th. So that's what's going on in gold. I don't consider this pause a bad thing at all, but like everything else, here we are. We have very non-committal situation at the weekly level in gold. On Wednesday, I'll try and Wednesday's the 31st, so that would be the end of the month. So it'll be interesting to see where we are as we head into the last trading day of the month when I go to the report then on Wednesday. All right, let's move on to Bitcoin. So Bitcoin, I think it's pretty obvious now that the major top is in. Any thought here that we're going to go back above 14,000 is insane. I think actually more likely we should be much more worried, obviously, about this support area at 9,000. If this holds, that would be very strong. Otherwise, we're looking at 8,500 or even the low of 7,500 to see if we can get a bottom can be formed here. So that's what we're dealing with in Bitcoin right now. This low from 2 weeks ago is important, and then this high from as we move out of this consolidation pattern here. But this was definitely a blow off top. This was definitely the market getting way ahead of itself. To be honest with you, if Bitcoin were to consolidate here between 8,500 and 9,000, who's going to argue with that after a low of 3177 earlier at the end of last year? So it's just not anything to really, if you're complaining about Bitcoin's price action right now, you really are complaining about spilled milk. So on the other hand, while we've had all this other non-committal stuff, right? Gold is non-committal. I'm going to show you the chart of the Dow. The Dow's terribly non-committal. Silver is committal. It's committed, and it's committed to going higher. We closed above the resistance line that I talked about last week. No new high, but getting the close above this level I think is very strong. So, but that said, this could be a topping pattern. This top here, 1650, could form and hold. But we did get a weekly close above this. We get a monthly close above that. That would also be very strong. So I think the thing for silver this week is breaking above, even if it's just briefly breaking above 1650, pushing the bears back a little bit and not allowing 1650 to form up as strong resistance, and closing above, closing above the February high at around 1630 or so. If that were to happen, I think we'd set up for a really nice second half of the year in silver. Moving from 1650 maybe to $18 or even $19 by the end of the year, depending on how other things shake out. With all the political turmoil happening, it's hard for me to believe that gold is going to be trading below 1,500 by the end of the year and silver below $19. I just feel that in my bones. So we could get a downdraft between now and then, but it's not going to be a straight shot up, certainly. But that's where I'm thinking. So, but we'll get a better understanding of that once we get a look at the July close. All right. And now let's talk about the Eurodollar. So I have up here, now for those of you who don't know what Eurodollars are, the Eurodollars are dollars that are held in foreign bank accounts being paid foreign interest. So the Eurodollar futures market is a look at what the expected rate will be in 3 months' time, or at the time of what the interest rate will be on 3-month money on the closing date of the contract. Now, this is the December 2019 contract. All right, it's just FYI, so everybody knows. This is going to get really, really technical and weird for those of you who are market professionals. And to be honest with you, this is an area where, I will probably get a couple of things wrong. So let's, just pointing it out. Let's see if I can get it all right. So right now, when you look at a Eurodollar futures price, it's similar to a bond price, in that if it's trading at 100, that means that the expected rate of return is 0. That the offshore markets, savings accounts, 3-month money will be trading at 0%, right? That the effective rate will be 0%. And so anything below 100 will be a positive rate of return. Anything above 100 will be a negative rate of return, right? So trading at 98 means that it's expecting around 2%, right? So, and what's important is the difference between the Eurodollar outlook and U.S. Treasuries, or the Fed, the U.S. Treasury futures market as well, which is known as the TED spread. The TED spread is a measure of credit risk, and right now the TED spread is low. Hit a high of about 0.65 earlier in the year and about 0.8 last year. And it's trading below 0.2% now. So the lower the TED spread, the lower the credit risk. And it's also now the TED spread chart, which I don't have for you, but I was looking at this morning, is incredibly volatile. It's all over the freaking place, down below 0.4%. Week to week, it's just it's all over the place, which is telling you that there's a lot of volatility in the market as the market tries to figure out where we actually are. So this is what we've got. If you guys follow what I talk about and you follow anything, and I know many of you do. Many of you follow Jeff Snyder's work over at Alhambra Partners. Now this is the May 29th Eurodollar 4 event he talks about all the time. That's this peak right here. So during this moment, Eurodollar futures prices sold off significantly, or rose significantly, and the yield and the expected yield fell. Right, so prices rose, and the yield fell, meaning there was some stress in the market, and then that set in motion but at the same time, this is also part of the trend. This trend downward downward in price and upward in rate. So until we got to the end of the year, and then the Eurodollar futures market actually presaged the Fed, the bottom in the stock market on the week of Christmas, and the Fed reversing its monetary policy guidance at the January meeting. Remember, the Fed raised interest rates here in early December, and reversed its communications policy at the January meeting. But the Eurodollar markets were already moving in that direction. The Eurodollar markets were already forcing the Fed into this move by saying, look, we're expecting much lower rates of return. We're expecting central banks to lower rates in the future. As in, by the end of 2019, we expect the expected rate of return on offshore money was going to be falling, meaning that the central banks were going to be cutting rates. So we expect this to happen, and then that happens. And Snyder, when he talks about the Eurodollar market, says this is where real monetary policy lies. This is the real monetary system. This is what's actually happening, and the central banks follow what's happening in the Eurodollar markets as opposed to set what's happening in the Eurodollar markets. Well, if that's the case, then this top that we have here is interesting. So we've got Snyder's event here, which starts the turmoil in the Eurodollar markets and signaling that inflation is over. We get this move here, so we start to get this uptrend, and then just looking at it technically, when I do this, I always kind of look for anomalous behavior because I see this behavior up here. So now I'm looking back through this uptrend to see if there's any other technical signals and tell me if there's any weakness. Now we had a 2-bar reversal here, but then it was immediately reversed right after it. So the bull, the bull market in Eurodollar futures wasn't over. Rates were falling. We got a little bit of a consolidation here, and then boom, and then we get a consolidation, and then boom. So we have a kind of a classic 3-stage uptrend rally, technically. It's nothing weird about this. But then we get this blow off top here, which interestingly coincides with the Bitcoin top in price, gold, and all these other things that are happening. And now we get a 2-bar reversal, an attempt at moving higher, doesn't work, fails, and then we get a breakdown this week. And so this is why I think the patron asked this question about the Eurodollar futures market this weekend, because of this signal here. And this signal is propagated across time in all the Eurodollar, across the entire Eurodollar futures curve, right? So if you're looking at the July contract, the September contract, into 2020, all of those quarterly contracts that we have data on that goes back a significant amount of time, those contracts all show a breakdown in price, this week. Significant? I'd say so. What is that saying? It's saying that from here, the Eurodollar markets are beginning to expect to see higher interest rates being paid on offshore money. What does that also mean? That means that if 3-month money, if interest rates are rising on 3-month money, that means that the drop in the LIBOR rate, which we've seen over the last few months from 2.8 down to 2.3, is probably nearly over. And that stress is beginning to come back into the market. And so again, I told you earlier that the TED spread is sitting at a low. Well, are we looking at a moment in time when the current 6-month trend is over, and now we're going to see a new trend emerge? And if that's the case, then get ready for a very, very ugly second half of the year in the Eurodollar markets, as well as the credit markets and the interbank markets. That stress should be rising from here. Right now, stress looks low because the markets believe that the central banks are all going to cut and provide stimulus and everything else, and that's creating that that kind of it's creating a what's the word I'm looking for? It's creating confidence that everything's going to be okay in the short term, but is it really? Okay. Now I can say this as well, that the inversion of the Eurodollar futures curve has abated for the most part. It was really bad this time last year, where it was inverted out to 2020 and 2021. It's not inverted anymore as much. It's inverted out in 2021, but not in 2020. So the anticipation of the Fed lowering rates and the ECB injecting massive amounts of liquidity into the system has probably got people, at the very least right now, not so worried, that they've been mollified that the central banks are going to provide the liquidity necessary. Because, of course, what do central banks do? They follow what the Eurodollar markets want them to do. And the Eurodollar markets are now saying this is what's going to happen next. So, at the same time, central banks are going to lower rates, which is going to create some interesting problems in the spreads. So we would expect the TED spread to widen from here, right? So I think I got all that right. I certainly hope I got it all right, because if it doesn't, then it's going to be kind of ugly. So I think that's the right read here as to what's happening. And if you think I'm wrong, those of you who are Eurodollar professionals, please leave the comments. Help educate me on this stuff as much as possible, because while I think I understand these markets, and am trying to get better at understanding them, there are gaps in my knowledge, and I'm going to just be frank and honest about that. So let's hope I got it all right. And again, be free with comments and criticisms, because again, it only makes me a better analyst, right? At the end of the day, it only makes us all better informed. All right, and then the last thing to talk about is the Dow, real quick. The Dow looks bored. It's moving higher, and this was a slight uptrend this week, a slight up bar this week, but trading within the bounds of last week's action. We just barely pushed to a new high the week before. This is an inside bar. Maybe this is a harbinger of a correction in the Dow. I don't know. We'll see. But right now, the S&P looks strong above 3,000, and markets don't know really which way to go. But if the Eurodollar markets are beginning to roll over, then maybe so is the Dow. All right, so that's what I've got for you today. And it's a very non-committal week from the Dow. We've got a coin flip as to whether we can go higher or lower. The U.S. GDP print on Friday was good, but and it was good enough to actually put the euro on the cusp of a significant breakdown. I don't have a chart for you today, but we're going to talk about the euro on Wednesday as we get closer to the end of the month. But look out for $1.1155 on the euro. That's the recent low. If we get a daily close below that, Katie bar the door, because it'll probably mean we'll get a weekly and or monthly close below that, and that means we're going back to $1.03 in the euro, and I'll be right about that. The more interesting thing is to see whether or not there is a bifurcation between the pound and the euro, which I talked about a little bit in my article for Money and Markets on Friday. We didn't get the close that I was looking for as a one-bar reversal this week, but that market, the euro pound cross, looks like it wants to change. It wants to change direction badly, and with Boris Johnson's new cabinet, I think that we're going to get that direction change. We may not get it. We didn't get it this week, but we could certainly get it next week or the week after. All right, so that's what I've got for now. We'll be back again on Wednesday. I'm going to try and enjoy the next couple of days. Probably write something maybe tomorrow, but I'm going to take the rest of the day off and hang out and enjoy what is absolutely gorgeous weather up here in northern New Mexico. So you guys take care. You be well. As always, thank you very much for being patrons. It actually allows me to get away from my house for the first time in a couple of years. So you don't really understand how appreciative I am of all of you. So be well. Talk Wednesday. Keep your stick on the ice.